Agribusiness stocks were given their own index on the ASX on May 31st, 2022. What will this new high profile in the stock market mean for food and ag companies as they move to centre stage on the ASX? To find out, the Australian's business editor, Carla Lusukian, is talking to David Williams, Managing Director, Kidder Williams, and Ken Chapman, Head of Strategic Delivery, Capital Markets at ASX.
So we're going to be talking a little bit about how to get more investment into, agribusiness and primarily through the ASX. But before we do that, I just want to ask David about this hat because it's a little unusual.
Well, I didn't realise I was going to come and talk about ASX indexes. I thought I was going to come and bag the Russians, and I wanted to look like I was more or less, Ukraine sympathetic. So this is my Ukrainian hat, which unfortunately it's a raccoon hat I bought in Saskatchewan while I was working there, but it'll do for the thing. But it's one of my cheap jokes, really. It's all I got to offer.
But there was a serious point about kind of the wheat that we were talking about before. It's not just the hat.
Well, I mean, look, I'll say more about this in the wrap up with Barry Irvin, but the Russians have again conducted the great grain robbery of all time. And if you look at the FAO index, which I'm sure most people have not done, but it reached its highest level ever in 1972. And in 1972, what happened was that the Russian crop failed, the wheat crop failed. And because there's no technology in those days, people didn't know about it. So they sent their two best negotiators to the Hilton Hotel in New York, and within days, they bought 25% of the wheat crop of the US. And at the same time as they're sitting in the Hilton, bought 11 million tonnes out of Canada and Australia without moving the price. Worse, Nixon put $500 million to fund it. And so a month later, they'd bought half the bloody American crop, a big chunk of ours, a big chunk of the Canadians, and then the market got wind of the fact the price went through the roof. So the FAI food index, if you look at it in 1972, spikes through the roof. And between then and 2008, when we had the Lehman crisis, it came down, and it kept coming down until the spike of the Lehman crisis, and then came down again. Today, if you go and look at it, for the first time in 50 years, it spiked above what the 1972 index was. Again, caused by the bloody Russians. So I want to bag the shit out of them. But worse than in 1972, we've now got a perfect storm because we've got the Indians now preventing export. We've got 20%, 25% of the China crop gone because of floods. We've got underinvestment in Canada, and the price is going to continue to go up. And that's going to stuff, not only our food industries here, but in particular the feedlot industries are already suffering.
It's hugely favourable, obviously, to some companies. And I guess one of the things that we wanted to talk about was that the ASX, hopefully everyone has seen this, but on Tuesday launched for the first time an agribusiness index, which GrainCorp is obviously a large part of, and there's, I think, 24 or 25 other companies. So, Ken, do you want to just maybe run through why the ASX decided to put up an agribusiness index and kind of how you went about doing that?
Sure. Well, indices are really important. There's a lot of passive money that follows indices. They give great profile to companies that are in the index, of course. Of course, everyone's heard of the ASX 200 and the big global indices that we have. We also have a range of sector indices, mining, energy, banks, etc. And surprisingly, and it's frankly a bit of an anomaly, there wasn't any agribusiness index, no index attached to the sector. Now, the agribusiness sector is actually only about 1%, just a bit over 1% of the ASX by market cap. So it's not a huge sector like some of those others, but it's time that profile was changed, I think, and certainly that was one of the major drivers behind us setting up the Agribusiness Index to try and lift the profile of the sector. We believe the time has come for that, and that's the background to it, really.
And is there a house view as to why there hasn't been more agribusinesses who've decided that the ASX is the appropriate path to raising money? We've got loads of obviously very large businesses, but they're just not there.
Yeah, well, David, you probably got a thought about that.
Well, look, first things first, the indexes are really important, and the reason for that, for those who are not sort of in capital markets, is that there are hundreds, thousands of funds around the world who have set themselves up with no other purpose than to invest in indexes. So when you get into let's say, for example, the ASX 200 or the ASX 300, there are funds around the world that have to actually buy it. as a company, you might never have even heard of them. You might never have talked to them. Almost certainly you haven't talked to them. But they have to buy into it. So it enhances the liquidity and the price of people in the index. Sometimes there's a downside to that, by the way, because if you slip out of the index, you get a bit of volatility. But in the main, it's a good thing to be in those indexes, and it drives a lot of investment that otherwise wouldn't be here. And so I think, what we're doing with the ASX and setting up this index is fantastic. Still a long way to go, because there's two sides of that coin. One is you've got to have the index, and the other one is you've got to have the funds that, can invest in that index. But I think what we'll see very quickly is the more innovative bulge bracket banks and some of the local banks will set up products. They'll set up a fund and go, well, we're going to invest in the agri index, and as over time the ASX will refine it up. It'll get stronger and stronger means of calculating whether you're in the index or not, like market cap issues and so forth. These things are typically only reset, say, every 6 months. It doesn't happen on a daily basis. But I think we'll see that. I think there's also some opportunities, Ken and I were chatting about it, for me, making it more of a global index. So start with the region, start with New Zealand, start with Southeast Asia, so that you get a lot more depth in the index. So that's number one. The way in which these indexes work, though, in the main, like let's say the ASX 200, you've got funds who can invest in you only if you're in that index. But what I think is also needed is a separate product, which is that you can invest in a basket of the currencies anyway. So people who say, I'm interested in agri, but I don't necessarily just want to invest in Bega or Select Harvest or whoever it happens to be, ACO or whatever. I want to invest in a basket of a lot of them. So I think we'll see two things set up in the next 6 to 12 months. We'll see index funds that are going to invest in the agri index, and we'll see somebody packaging up a product so you can buy an ETF in the whole index. And that's going to be pretty innovative, I think.
We're very hopeful that a product issue will issue an ETF over it or something like that will enable someone to buy the index as a basket, essentially. And, we all know that one of the other drivers around the creation of the index is we want to make it as diverse and inclusive across the whole sector, so it's not just very small or very singular focused in the sector, but it's very broad. It captures all of the sub-industries that make up the primary agricultural food and fibre ecosystem. So currently there are 25 stocks in the index. It's not capped. That can go up and down depending on whether a company meets the criteria to be included. And as David said, it gets rebalanced every 6 months. But we're hopeful that we will see some product issuers that will issue product that will enable people to trade this diversified pool of securities that make up the index.
I'm hoping that the index itself will drag more people into the listed space, and it's probably not lost on a lot of the people here who've come out of basic sort of agribusiness that 90% of the country is not in the listed space, and I think it's worthwhile just reflecting for a moment on why that's the case, because this country was built on statutory authorities. And, wheat board, the barley board, the boards that you've never even heard of before, the navy bean board, the tobacco board, the peanut board, and in 1990, John Kieran, the then Minister for Ag, had a conference down at West Point. He pulled all the ag ministers in. He said, right, I'm going to withhold competition payments to the states unless you guys privatise. And most of those statutory authorities got turned into co-ops because the government gave back the assets to the farmers on the basis that they really weren't the peanut marketing board that the government had set up. They were as a peanut marketing board where the funds from the peanut growers had gone in to make it up. So most of them got turned into co-ops because as the cabinet at the time in Queensland said to me, we're happy to give you all the grain grower assets, but I don't want to wake up tomorrow and find that John Elliott owns them, quote unquote. So the co-op was the solution, and then most of those co-ops became either listed companies. So the Egg Marketing Board in Victoria became the Egg Co-op, became Farm Point Foods, and so forth. And so a lot of them, however, just merged and stayed as aggregators. And that's why we've got this sort of history. And as we go on, with this index, it's one small step, I think, to encourage some of those people to come back. And some of the people who have been aggregating it, like Brent was up here before talking about JBS. Well, they've sort of toyed with the idea on and off over the last 5 years about whether they should be listed in New York or not in New York. There'll be people like that who might go, what, why don't we list just the Australian assets? And so I think it's quite an exciting next 12 months, I think.
You've been involved in buying and selling a lot of these companies over the years. What would you say now would be the investor appetite from perhaps institutional investors for these kinds of assets?
Enormous appetite, but there's nothing to invest in. If you want to if you think you've got a penchant for, let's say, the meat industry, well, there's nothing to invest in really, you know. And you know, there'll be people on the outside of it who are tinkering around the edges, like Mark at Elders or somebody like that, who might be doing meat trading. But, you know, I think to bring some of these things to market and have a capital market to support that will attract some people in.
And that highlights ASX's main purpose, and that is to connect companies that need investment for growth with investors and what is the fifth largest savings pool in the world.
But what's your sales pitch though, if you're going to go to a prospective company and say you should be on the ASX rather than, you know, do a bunch of other things? What would you be telling them?
Well, there's a number of good reasons why companies should see the ASX as the way it raises capital, or it's the venue that it raises capital. We have a very robust regulatory framework through which to raise capital. We have all of the efficiency around connecting those companies with investors through the global platforms that we run. So it's really that value proposition of seeing ASX as the place for capital to grow. And as all the speakers have been saying, this industry there's going to be continuing demand for vast amounts of capital to transform this sector, to make it more sustainable, to meet the various challenges that are out there. ASX has to be there to contribute to that ability to raise that capital to meet that challenge.
The sales pitch is that the world market and appetite for agribusiness assets is insatiable at the moment. But the Australian appetite for it, with super funds here, has been next to zero. And so you look at probably the biggest investor in the last 2 years, Mark, who's here from PSP, he's probably put $5 billion into this country in the last 3 years. Where's all the Australian super funds, you know? But he's investing in meat, he's investing in salmon, he's investing in timber, almonds, walnuts, etc. And so one of the sales pitches, if you really want to raise capital, is that we've now got a much wider market and an appetite for it. And you'll be able to point to companies. It's like I've got an ASX 200 company that just went in the ASX, and I happened to look at it's over $1 billion, and I happened to look at the index the other day, and for some reason I was down at like number 186. Now, in a normal company, in a $1 billion company, the top 40, you'd lose all your institutions. That's it. Then it's mums and dads, right? I happened to my eyes clicked on number 186. It was a super fund in Greenland that had bought 500,000 shares at $2.50. I mean, it's nothing, of course. But what I'm saying is, I've never met those people. I didn't even know they existed. But because they're in the index, they went in. And so somebody could come and point to them and go, you know what? There's 50 names that I could go and have a chat to myself. And we've got lots of projects in this country that just need capital. I mean, Brent was up here talking about salmon. Steve was talking about salmon. I was just reflecting that in 1990, the salmon industry in this country started in 1986. All those fish came from Brunswick in eastern Canada. All of the fish. It's a Canadian industry, basically. But anyway, there were 6 listed companies in 1990. Now there's 1. It's Tassal. But at the same time,
it's in the index.
People like Steve, I'll tell you what he wants. He wants another species. Tassal suits him just fine, and so does Huron, because every day they take fish out of the water. They're in 250-gram, computer cut, blah, blah, blah. But he wants a second one. He wants a third one. And there's nobody who's got the balls, or the capital more particularly, to do that. Not with barramundi, not with cod. There's all these little experiments, but somebody needs to throw some capital at this. And I reckon if I went to Steve, there's now a producer up in the Northern Territory called Humpty Doo that's doing about 6,000 tonnes. So nearly big enough to supply half his stores, right? But if I went to Steve and said, I've got 20,000 tonnes, put this in context, by the way, Tassel's doing 40,000, right? And Huon's doing 40,000. But if I went to Steve and said, I've got 20,000 tonnes, but in order to get it to you, I need to go and raise 30 million. Can you give me a 5-year contract at a price? He'll do it. Well, he might not do it. He might tell me to bugger off, but his buyer will do it. But I've tried this with them. I tried this with them with prawns, and they go, we'll give you a 10-year contract. Because if you don't, there's 2 things he needs in his supermarket around Christmas. He needs smoked ham, and he needs prawns. If you don't have one of those, mate, you're not going. Nobody's coming in the store. So he'll give you a 10-year contract at a price. And now with an index, we're going to encourage people to come here and invest in that.
Fantastic. We've got time for questions from the audience, so please raise a hand. David's hat is not taking questions, so I apologise for that. While we wait for the microphones going, just raise your hand if you've got any questions for our panellists here. While we're waiting for a hand to go up and someone to find a mic, Just on a cheeky stock trader's kind of point of view, David, so should I buy a basket of ag stocks right now because in a month and a half's time there'll be a whole bunch of foreign companies coming to buy the index?
Well, there's a number of things happening at the moment, and maybe a lot of this will get done in the afternoon and certainly get done in the wrap-up with Barry and I, but, you know, things are very, very dire out there at the moment. You know, most of the clients I see, their costs are up probably about 10%. Put a circle around 10% for what I call COVID costs. Not just testing and distancing, but the sorts of things that people have been talking about in terms of people not coming to work, social distancing, etc. There's at least 10% that has to be covered. And so most people are looking at Stephen and going, right, I'm going to see him next week and I want 10%. And he's going to go, I'll give you 3. Now, yeah, so I think most people are going to get 2 or 3 shots at a price rise, and some of them are going to hurt because of that, because he's in the market buying milk at record prices and he has to pay for it. And so the same thing for Bega, they have to go and pay for their milk as well. So they can't, a lot of these people can't hang back and go, well, I'll give you 2 cents even though I see you paying 10 cents a litre more, you know. So there's that. The second thing is labour. The single biggest problem at the moment is labour, and it's not just what's coming, which is increases in labour costs. It has to come because inflation is going to go through the roof this year. But access to skilled and unskilled labour, and the federal government has got to get off their fat ass and do something about it. I'm trying to bring a guy in from Florida at the moment who's 30 years in one of the biggest pharma companies in the country. It's taken me a month to get him a visa to come in here just to visit. Now, if you do that with unskilled, there's unskilled guys in let's say in Vietnam, already trained up to be in abattoirs, and the abattoir industry alone, where Brent is, but they could probably take 1,000, 2,000 people in a heartbeat. And what's happening is we're running 1 shift instead of 2, or 1 shift instead of 3. We've slowed down the chain, and in southern New South Wales and northern Victoria alone, there would be more than 100,000 lambs that haven't been killed. So I'm getting back to your question, which is, there's a lot of hurt coming in the second half. Most people had a great first half, but the second half is going to hurt some people.
Okay, so I won't buy just yet then. Question over here in the corner, thanks.
I'd like to ask the man under the hat. The question is your point about Russia taking over Ukraine's food security assets. I mean, they're destroying towns as though they don't matter, whereas getting the access to the grain is the big thing. And food security is obviously a massive situation. The gateway situation in terms of EU putting up $300 billion to try and emulate the Belt and Road scenario, and America's doing something similar in South America, and Australia's doing nothing in comparison in terms of the big picture. Are you any plans to talk to government about this other than just berating the Russians about it? How do we do something about the Australian government, the new Australian government, saying, all right, what do we do collectively about food security before we find our food security assets are owned by other people and we don't have control of them and we become serfs to that system?
Well, the short answer is, look, I had breakfast with Jim Chalmers just as the election started, and I gave him my views on a whole lot of things, which I think I saw his eyes glaze over, I'm not sure, but I think it's more serious than your question, and I'll tell you why. Because the Chinese and the Indians and most of the developing nations, especially the Chinese and the Indians, have done an unbelievable job in the last 5 years dragging people out of poverty and significantly increasing the income of sort of rural communities. Now, when you increase those incomes, they want to eat like us. They don't just want rice anymore. They want David Blackmore Wagyu and everything we eat. And what's happened right now with these increases in prices is, and lack of access to any product, for example, we are going to, by definition, push a big chunk of those people back into poverty and a big chunk of them back into starvation. And we're already seeing riots in South America and so forth. So it's a really serious problem for the world, restricting access to product, pushing the prices through the roof. Nothing we can do about that, by the way. But at the moment, as soon as you see somebody like India say no wheat exports, that's the beginning of the end. And as somebody said this morning, we're looking at India in particular as to what they're going to do with rice, because rice has been, relatively speaking, compared with all the other grains and the oilseeds and so forth. So this is a really unbelievably serious humanitarian problem that we really haven't seen before. And I blame Russia for it, by the way, but it's a multi-factored problem. India's got a problem, and China and the Canadian government wanted farmers to start to get a bit smarter and not plant as much. Well, they've missed the boat, So there's a lot for the government to do here, but there's as much for it to do, by the way, in terms of other government policies with respect to logistics, which is killing people, and labour, access to labour. And I'm not talking about keeping labour costs down. I'm talking about getting people in here to work, because every industry you've got is hurting. Now, if you're an abattoir and you go from 3 shifts to 1, you can't kill the lambs. Okay, put them back in the paddock. I mean, they're still alive. When you go to kill them, by the way, they're not lambs anymore, so you've got an old, hoary old sheep. But if you're taking lettuces off the ground or cherries off a tree, mate, you're fucked. You can't get them off. And even if you can get them off, you get them into a factory and wash them and put them in a bag, and then you've got to get them to Steve. And at each leg of that, there's not enough people.
Yep.
So
now, we are over time, David, so I also want to make sure you've got some things to say at the end of the conference when you do the wrap-up, so I'll hold on to that too. Please thank Kem Chapman, David Ilyich Williams and Carla Lusikian.